Hi friends, I'm back with one more video. Today's discussion would be on one of the adjustment for the debit spread. This is my real trade, ongoing trade on the Tata Steel. So wherein I've deployed a debit spread. So I've deployed this trade on 7th of April. All right. So today I'm just going to discuss you about the adjustments in terms of making this loss 6,900 loss in case if the market view goes against us, how to reduce this loss. All right. Forget about this profit. Today's session is only going to how to reduce the loss. Okay. So just to give a context, I've deployed a debit spread in Tata Steel with one buy bought and one like sold. Okay, the capital was 27,000. The maximum profit is almost 35% on 27. So 10,000 on 27 would be like 35%, and the loss is almost like 20 to 25% on the capital deployed. So let me take you back to the chart of Tata. Why exactly I've taken the debit spread? This is my own price action, friend. So based on my price action, I somehow feel that Tata Steel will make a up move. Okay, because it is resisting at the critical support level. So my view on Tata is like it might bounce up or it might go up. So I've deployed somewhere here, right, on the 7th. So this is like 7th of April. It made a move of like 1 or 2%, but again due to Nifty down and the sector down, it retraced. So my expectation is, my view is some maybe Tata will go up. So on a very bad case, if my view goes wrong, if Tata falls, right, what strategy, what adjustments we need to do in terms of reducing the maximum loss. So let me also take you to this sector. See, whenever I deploy the debit spread, so basically I have the view of the market. So let me take you to the index and let me take you to the metal sector. The reason why I've deployed the debit spread in Tata Steel is this is a metal sector, all right. So based on the metal sector price action, I have a view of metal sector going up, because the currently, let me delete all these things. Okay, that will give you a good picture. Give me a second, I'll delete all. Right. So this is where the CNX metal sector stands. So what I my view is, maybe metal sector can bounce back from here because we have a resistance, previous resistance, which will act as a support. If not, it might come, take the support of the previous resistance, and it might bounce back from here. Or let's say if it comes to this dynamic resistance line, it might take a move. If it breaks the dynamic resistance, which will act as a support, and then the entire metal sector will go down. So then I'll plan to reduce my loss. Okay, so let me take you back to my trade. So this is a debit spread. So let's say tomorrow there is a bad news on Tata Steel. So we are expecting that the stock to fall down, because I've taken this trade with a view of bullish. So this is a call bullish debit spread. So let's say tomorrow, if there is a news, or looking at the chart, or looking at the open interest, if Tata Steel, right, might fall down, so what adjustments I need to do to reduce this loss? All right, I'll go to the calculator. I'll calculate it. 6,923, 6,923 divided by 450 lots, because Tata Steel, one, this thing would be like 450. I'm just trying to divide it to 450. So I have like almost 15 points. So I have to just cover the 15 points to make my trade, either green or to reduce this entire loss. Just to show you like lots, it's 450. Let me take you to this page, right? Okay, so if you see, this is a 425 quantity. So Tata Steel, as one lot, will comprise of 425 quantity. Okay, right. So if you look at the calculator, so we need to cover 15 points, 15 or 16 points to reduce this loss. So what I'll do is like, Let's say my view is bearish from here. So I've deployed this entire debit spread with a view of bullish, but again, due to some news, open interest or chart analysis, I have a view. My view has changed now. So maybe Tata Steel will go down. So what I'll try to do is like, I have to cover this loss of 6,923. If you look at the black box on the expiry date, that would be my maximum loss, 5,000 or 6,923. So just to cover this 6,923, I have to cover almost 15 to 16 points, right? 6923 divided by number of lots, so that would give me 15 points. Okay, I'll go to trade, add a trade. So I wanted to sell a naked call option. So look at this loss of 6,093. So I need to cover 15 points, right? So I'll go to my option chain. Okay, I'll go to the strike which closely matches my criteria, that is like 15 points. So this is like 13.70 and this is 17.30. So let me at least go for 13.70. I'm just planning to sell this leg. The moment I sell this, just have a look at this payoff graph. Okay, sell. All right, I'll say done. So now my loss has become unlimited, but this unlimited loss is on my call side. So to start seeing the unlimited loss, market has to travel through this green zone, right? So then only, so by the time market travels to this green zone, so I'll exit from this call if that happens. But my view is now bearish. So when I sold this call with a premium of 13.7, look at the loss. Loss has reduced from 6,000 to 1,000. Look at the black box on the expiry day. It says 1,000. So let me deselect this. This was my original loss, 6,923. So when I sold this extra leg, when I made this ratio split is basically I bought one leg and I sold one leg. Now I'm trying to make it a ratio split with one bought and two sold legs, right? See the change. Now my loss is 1,100. Initially it was 6,000. Look at the profit area, profit zone, right? I'm deselecting this. Profit was 10,000, but even the profit is increasing and even I'm able to decrease the loss with this single adjustment, right? Obviously profit will increase because we are adding some more extra credit. But looking at the unlimited loss, I have the unlimited loss somewhere here. Okay, but market has to travel through my green zone, so then only I'll be able to see the unlimited loss. But my view is bearish from here. Right? So if you don't even want to give this 1,000 rupees, right? Anyways, your view is bearish. So why I should be giving this 1,100? So in that case, what you can do is, right? You can just uh, s- rather than selling 1460, just try to sell more premium, right? I'll go one strike above, right? 17.35. So we have to cover this 15, right? But the next strike premium is 17. So when I am trying to sell this leg, look at the profits. And now if the market goes down from 6,000 loss, we will be into profit of 451. So if you want more profit, if you are confident about your price action saying that Tata Steel will go down from here, you can just start looking out for more and more premium, right? So if you sell 22, your profit would be like 2,427. All right. If you sell 28.7, your profit on the downside will be 5,274 on a capital of, obviously your capital will increase because you're selling the naked call options. It's up to you if you want to come out. See, initially you have deployed the debit spread with a bullish view, but now market is going against your view. So I guess you have to just look out to make this loss zero. What I meant to say is this was my original trade, right? So I'll be like more happy in case if I can just mitigate this loss to zero or to 1,000 or 2,000 or just come with cost to cost. Do not take double view. Initially your view was bullish and again if you wanted to get profit by the falling market, I think that's not a good strategy. So your view went wrong, right? So just come out of the trade with minimal loss or by making it to zero, or else in terms of covering your brokerage charges with like 500, 600. Okay, so what I mean to say is you should be just try to cover 13 premium. Okay, just leave. You can just give 1000 loss to the market. If not, you can just try to cover like 17 or 15 and just come out of the trade with cost to cost. So this is the beauty of debit spreads. Okay, so even if the market goes against your view, you always have different adjustments in terms of reducing your losses. But for this you need to have extra capital. So if I deselect this thing, my original capital was 27,000. The moment you end up selling the naked call option, so you need to have the extra capital. Option selling is all about having extra capital. The more extra capital, the more capital you have, so you will end up reducing your losses, or you will get into profit also. But if you do not have the capital, right, if you do not have the capital, you have to pay 25% of the loss on your capital deployed. Debit splits, no doubt, it's a very good strategy provided you have like very good view on the market, because it has the great potential of great returns. It gives you almost 35% in a month, right? Basically all the stock options will have one monthly expiry, but on the other side, it even can draw down your capital, right? But it's always good to have extra capital. So if you have extra capital, just deploy the debit spread if it is going as per your view. So let's say tomorrow, if market Tata Steels makes a move of 5%, right? If you look at the black box, 5%. So I will be making 4,000 profit tomorrow, only one day. Let's say Tata Steel makes a move of 4%, and it's not. I mean, you see that most of the FNS stocks, it will even make like 5%, 8%, 10%. So let's assume that tomorrow Tata Steel makes a move of 4.28%. You will end up getting like almost 4,000, 3,500. That would be like almost like 18 to 22% in a day. So that's the beauty of the debit spreads, provided you have a very good price action. You should be able to find the momentum of the market, and in case if your view goes wrong, so you need to have extra capital in terms of reducing your loss. All right, friends. So I think I've made it very clear. So thank you for watching my video. And friends, there is a playlist in my YouTube, so wherein I'll be discussing about all the adjustments, and also I've started a playlist for debit splits. Right, so it's a series of eight videos. So I've already done two videos. So there are like six more videos pending from my side. So friends, please try to watch all my playlist on the different adjustments on the debit spread. So debit spread has too many adjustments. We can convert it to ratio spread. We can convert it to iron fly, not iron fly, iron butterfly. We can convert it to ladder. All right, friends. Thank you for watching my video, and please, friends, subscribe my channel, and please share with your friends if possible. Thank you.